UBS. He's global commodities analyst at UBS. And Julian, I like reading your note because I like a note that says everyone else just doesn't get it. You're really misunderstanding everything. And what they're misunderstanding, according to you, is the China copper collateral carry trade. Tell me why they've got that wrong and what it means for the market.
Yeah, basically what's been going on in the copper market is that the market started out this year exceptionally tight. But it didn't look like that to traders, basically because China started destocking. And what had been happening from August last year was a lot of Chinese companies that couldn't get dollar borrowing out of their local banks started buying copper and using that as collateral to get hold of dollars from international banks, basically using kind of trade finance. But once the People's Bank of China worked this out, which they did in March, they told them to stop, and then they made it illegal in April, and that caused a big destocking. So it looked to everyone like the market was weakening, when in fact it was very strong. And once they ran out of those stocks, it started looking like the market was getting stronger, when in fact it's actually getting weaker. So for us, copper's a sell here, and we think it's got significant downside.
Got it. I think that's very interesting. The other thing I was really interested in, and it taps into something I've been talking about for a long while, and that is my concern about the fact that exchange-traded products on commodities and professional financial investors are skewing the price of the underlying. So you've been looking at the CRB Rind, which is an index of largely non-exchange traded raw materials. I thought this was quite interesting for giving us a true price rather than the skew that the financial investors put on these commodities.
Yeah, that's right. And basically, when you look at the CRB Rind, it's made up of kind of commodities like tallow and steel scrap, the types of stuff that financial investors can't get involved in. It's just the trade that moves these prices around. And what we noticed in the middle of July was that while copper was kind of getting back up towards its highs, the CRB Rind was actually falling. It was a sign that the underlying demand for commodities was actually basically falling to pieces. Now, we saw the copper price basically fall backwards towards that in early August as there was a general risk-off event in markets. But over the course of the last couple of weeks, copper's been rising again, while the CRB Rind has been very weak. Now, that's telling us again that the underlying conditions for commodities in general are actually very poor. We're seeing that in Europe. We're seeing that in a lot of emerging markets ex-China. And again, it's telling us that the underlying conditions are going to start dragging copper down in the coming weeks.
Julian, let me jump in here with two questions for you. First of all, just in terms of the fundamentals, I'd like to ask you for a bit more of a medium-term outlook on what you see on the copper fundamentals, and in particular how China ties into that. And my second question for you, I think, is more of a question around the G20. On a regular basis, there are discussions about regulation on the commodity markets. Is this something that you're looking for coming into the G20, and what would your expectations there be?
Well, first off, in terms of medium-term fundamentals, we're starting off at a point where the copper market is very tight, supply has been constrained, but for us, a point where the market is tight, prices are high, but fundamentals are starting to deteriorate. That's the time when you should actually be selling copper. Now, in terms of China, its internal demand is remaining pretty solid. It's being supported by a social housing program, which is going to continue going forward. But it's the external demand that is showing signs of weakness. We saw that in the data today with the deterioration in export orders, and we expect that to continue and perhaps accelerate to the downside as well. So for us, the demand is the real issue, and demand is deteriorating. Now, the second thing, in terms of regulation, yes, regulation on commodity markets has become a very important topic. It's quite difficult to regulate commodity markets because there's so much trade, and it's hard to kind of separate out how much is speculation and how much is general trade flows. So it's always been tricky to get aggressive in terms of regulating kind of copper trade and commodity trade in general. But we do think, on balance, the likelihood is there are going to be attempts to try and regulate further.
Julian, thank you very much indeed for coming on. I thought it was very interesting about the collateral carry trade and also about the Rind as well. That's excellent. Julian Garrett, the global commodities analyst at UBS.
Thank you.
Still to go on the program.